Do mortgages allow for things like closing costs and repairs and other initial upfront costs to be rolled in? Yes, there's some caveats, but let's talk about that. So there is a section about seller financing. Check that out. We'll put a link somewhere around here. But at the end of the day, by default, I would say just kind of coming out of the gate, if nobody says anything and I got to set up a mortgage, no, I'm not rolling anything in. Here's why. On a purchase, the sellers, in order to quote, roll something in most cases, the sellers have to agree to pay for it. And you do that by raising the sales price. That's how you roll it in. So if you're buying a $500,000 home and you want the seller to pay for $5,000 worth of your stuff, you then buy the house for $505,000. The seller then nets to save $500,000 regardless, and they can do that. Now, having said that, and there's a whole section, so I don't want to go too deep on that because there's other stuff to go look at the seller concessions. Again, we'll try to put links in here. Let's focus about repairs. So if you're negotiating repairs, right, and you're saying, okay, I want this roof or the HVAC or whatever it is, typically, if you can get a seller to just fix it ahead of time before you close, that's the best, because if you don't own it, that way if something goes wrong, it's not your problem, right? So if they're repairing the roof and it's worse than they thought, then they still have to fix it. So I do like having repairs done ahead of time. However, that's not always the case. So somebody might say, hey, there's $4,000 that needs to be paid for to get new carpet because there's no flooring or whatever it may be. There are programs that can allow that. It's not by default, just every loan can do it. It can be done. So the answer on that one is maybe. Depends on the program you're doing. So chat with your lender. It is possible, though. That's the important part to know, that the repairs can be done. This should be worth noting. There are programs that also do allow for closing costs and things to be rolled in, whether it's a bond, a grant, even USDA, FHA 203Ks, like the repair stuff. They do allow things that can be rolled in, like closing costs. So you don't need the seller's permission or to increase the sales price. So those things can be done. So the answer is, generically, setting up a loan, I would not say that, I'm going to structure these things to get paid for. But if you disclose up front, hey, I want to do the best I can to keep money in my pocket, we will absolutely explore all the programs. Some do let you roll it in, some don't. The ones that don't, you can have the seller pay for it. And if there are items that can't be rolled in because the seller can't or won't or don't, can't, won't, or don't, I guess, there are ways to do it. So the answer is yes and no. That's where it's just hard. So reach out to the Mortgage Mark team. Let us know your questions. We'll be happy to walk through anything and everything. But yes, closing costs, down payment. Really, down payment, again, can't be paid for by the seller or rolled in, but it can be done through grant and bond programs and things like that. So in theory, yes, technically everything can get rolled in. So that, I don't know that I love this answer. We're going to go with it because it's the real answer. If it's confusing, I'm sorry. Reach out to us and let's give us another chance and let's talk specifics and see if I can get you a better answer than this video. But just remember, mortgagemark.com. And when you think mortgage, think Mark.